Hey, we're live now. June 11th, 2020. How's everybody doing? See a couple people asking if we're live yet. We're going now. Somebody give me the double knock. I'm guessing it's going to be Daniel. My money's on Daniel here. There it is. And it's from Daniel, of course. Gosh, smart money bet right there. So I hope everybody's doing well. Hope everybody's off to a nice day. Got some good weather going because the market's not going to make you feel that great today if you're long. If you're looking at the market right now, Dow Jones futures trading down about 850 points in a weird move. And I'm going to go through things a little quick here because we got a 9:15 hard stop today. I've got a couple trades I need to put together for my night trader people that I'm going to get out after the market, after that first 20 minutes or so. So I've been busy this morning. So bottom line is we've got a market that was actually negative all the way through the evening. All the way. Hey, Alex. All the way through the evening last night, which is rare. Usually we see little pops here and there. This thing stayed negative, and the NASDAQ was down there with it in the mud the whole day. This is going to be the big difference you notice today, everybody. Actually, I wrote something in my commentary to the Night Trader people where I said there was one verb you needed for the NASDAQ, and that is just jumping. When you look at everything else, Doc Emmerich needs to be calling the game, and he's a famous NHL commentator, play-by-play guy. He once used 153 verbs in a single game to describe the action of the puck, and that's what we need. Hey, James, good to see you guys. No money morning email. That's terrible. So this market is, as we've been talking about for the last, week? This market has put itself in a position that was precarious, was ready to pull over. Yesterday's Fed meeting did it. And somebody already said it. I loved yesterday's live stream as well. We talked about trading after the Fed. The IWM dropped 2% after the Fed. I mean, it nailed exactly what I told you. I hope some people made a bunch of money off of that. Tell me about it in the Q&A. Tell me about it in the comments. I want to hear how you guys did. Hey, Pablo. So let's talk about this for a few minutes. I'm going to go to the slides because I'm going to keep things moving because I still want to talk about your ticker symbols, even though we're going to be under a little tighter schedule than normal. So we got a decidedly negative morning on hand. We're going to talk about the results of the FOMC announcement. Hey, Dave, we're going to talk about the stocks in the news this morning. This is something that I really do want to keep in the rotation here. I like talking about what's right there on the headlines, even though today's headlines are obviously going to wash out everything else that's going to be in terms of the stocks in the news, if you will. And then obviously your questions and the ticker splits, and the last thing, trading today's tape. You're going to want to stick on that stick around for that because I'm actually also going to talk about tomorrow's trading. We're going to do a little bit of free form Thursday, but tomorrow, I've got to talk to Greg and see if maybe we can get done a little early. I've got to be my night trader people. I'm not going to be able to be with. So special night trader roundtable. I want to mention this again, June 18th, 3:45. We're talking about the reopening market. We're going to talk about obviously this pullback right now because I think it lasts longer than a couple of days. Strategic summer investing, trading for a strong fourth quarter, and most importantly, everybody's asking about hedging 101. Hedging 101. So let's move right into the brunt of things. Get into the meat of it right now. So a decidedly negative morning on hand. For the first time in a while, futures are negative. I already said this. Why do I need to waste time saying it again? Across the board. Nerves and tensions are now raised. We're going to see the VIX pop higher. It closed lower last night. We're going to see the VIX move higher. We're obviously going to see a nice pullback in stocks here. And it's all about the Fed's announcement, believe it or not. Things have been building. I don't want to put it on Jerome Powell because it's not. Things have been building. There was a big pile of tinder here in the market. I love that. Love the profits there. That's fantastic, Andrew. There were, tinder laying all over the place here. And in this case, Jerome Powell just happened to be the spark that dropped in there. We absolutely should keep the VIX guy. I said I was going to call you Guy from now on, but I'm going to call you Guy because that's your name. Classic market top as the NASDAQ has crossed over 10,000. Let's talk about that for a second. Remember back when the Dow was crossing 10,000? And you remember when the Dow crossed 15 and 30? 10,000, Dow 10,000. All the traders had the hats on the NYSE. It was a big deal. Everybody's been talking about the NASDAQ composite passing 10,000. It notched above it today, or yesterday rather. And now we're seeing the selling pressure. This often happens. Remember, mile markers, 100 miles, 200 miles, my trip to Maine every summer. Mile markers. The market watches mile markers and it takes stock whenever you pass them. Yesterday was a big one with the NASDAQ crossing 10,000. All of a sudden, people feel like, oh, we pushed above it. Time to sell now because we hit it. We rang the bell. That also factors into what we're seeing here as well. So again, this is a classic, and that's why I call it a classic top right now. It's a situation where you had stocks that were overbought. You've got sentiment that's showing that investors are going out and buying bankrupt companies at this time, which is a new little twist to that. But everybody's bullish. You've also got, in this case, some smart money traders that are loading up on VIX calls and loading up on puts on the indices. So we get that last little push above. At the same time, we get the Fed telling us, well, we'll talk about the Fed in a second, but what they told us, and then boom, the bottom drops out. Big question is it going to last more than a day or two? I believe it will. We're going to have a little bit of momentum behind this. There's a lot of profits to be taken in this market. Just on that alone, we should be trading lower. So that's the classic market top story. 3,200 on the S&P 500. We were talking about possibility of a 3,300, but I think this is as far as we're going to reach. Look at that overbought reading on the RSI. I tell you, this chart is going to show up every single day, and there's a reason why. This is the first chart I look at every single morning, where the S&P 500 is, what's the pattern over the last 5 days. And you can see the last 5 days, including that rally that we saw last week, pretty even to a little bit of a pullback building here. Now we take out this bottom. We're going to head down towards that 3,100 as a first stop, and then 3,000 will be the next stop. So in this particular case, it's going to be, I think, more than a couple days worth of selling on the S&P 500. There's your picture of the NASDAQ going above that 10,000 mark. Boy, that rang the bell, obviously. Lots of volume going up into that, overbought as well. And then, of course, you've got the Russell 2000, which has been telling us for the last couple of days, you better watch out. The risk is coming off. Let's get something straight. The NASDAQ has made about a quarter of its returns off maybe 5 or 6 stocks over the last month or so. Apple, Google is one of them. Facebook's clearly one of them. I mean, it's limited to 5 or 6 stocks that have made 25% of that 1,000-point run. That's one of those situations that is stunning when you think about it. It's very few companies doing a lot of work. And in this particular case, it is, it's one of those things that also tells you it's a market that's going to be toppy. Which pictures, I'll have to look when the screen is on, Jim, to see which picture is looking new, but there is nothing new here. So Russell 2000, as I mentioned, was flashing us a sell signal, broke below that 200-day moving average. Night trader people, keep with me here after the open here, because we're going to talk about you're going to get something about the Russell 2000. We're going to break through that 145. Yesterday, we struggled with 147, and it finally gave way at the close. Russell was really trying to hang in there because of that 200-day moving average. Obviously, that is out of the question now. We've got a much lower target on the Russell, and that has already come off some of its oversold readings. So let's talk about the Fed meeting real quickly. What in the world is going on with the Fed meeting? I mean, the Fed, Jerome Powell came out and said, he was extremely clear. The central bank is going to keep its foot on the stimulus pedal until the labor markets recovered from the devastation caused by the pandemic. He is telling you we're going to keep pumping money. The checkbook remains open, just like I said yesterday. The checkbook remains open. I'm going to write checks. It's almost like a student that's in college that's getting good grades, and maybe their parent says, as long as you say you're going to have good grades, or as long as you're showing me good grades, I'm going to keep writing checks because it's a good investment. The Fed is saying as long as we see a need in the jobs market, we're going to keep writing checks because it's a good investment. The FOMC projection shows, and so do if you watch the Fed Fund futures, shows the same exact thing. Rates are going to stay level through 2022. Their asset program, their purchase program, bonds, aka bonds right now, are going to continue at their current pace as well. So this is one of those similar situations where they're basically saying, we're going to back everything. It's the same thing that Jerome Powell said on March 23rd when this market bottom was formed. And that is the date that he said. That's exactly right, Val. Let's go Fed. So that's exactly what he said on the 23rd of March. We're going to do it out as far as we have to go. And right now, Fed Fund futures before the meeting, we're telling you 2022 in terms of rates going higher. It's going to be a while. And remember, just 6 months ago, the Fed Fund futures were telling us that we were going to see an increase in rates, not a decrease in rates. We wouldn't be fooling around with the 0 to 0.25% range. We'd be fooling around with something a little bit higher. Obviously, things have changed. At the same time, yesterday, and it was immediately after, Treasury Secretary Steven Mnuchin said that the U.S. needs an additional fiscal stimulus program. So, and he wants this one to focus on travel, retail, and leisure. So, in other words, the reopening. And I don't think this is an odd thing to have had happen, especially on the same day. This is a situation where I think this is a little more political because obviously the stimulus going towards travel, retail, and leisure business, that AKA reopening. That is a reopening play right now. And we need this reopening to be successful. We're starting to see hotspots right now in Texas and a few other states that are really starting to grow concern on COVID-19, making a second round earlier than expected. And I think that's why we're seeing Mnuchin come out and say, hey, we really need to come out and stimulate these areas of the economy because we want people to get out there right now. It's important for the growth as we lead into the presidential election in 4 months, yeah, roughly 5 months, almost 5 months to the day, a little bit to the week, certainly. But it's one of those situations where I think this is a little more political than what the Fed, obviously, and the Fed is apolitical. I mean, they stay out on the side. Mnuchin works for the White House, obviously. So I think that message of needing the fiscal stimulus, which certainly I think it's needed, where it's needed, I think has to have a question whether it goes to individuals or whether it goes to small businesses. Let's get small businesses in on this, for God's sake. But watch what's going to happen there, because the combination of the two, the Fed coming out and saying that we're going to go ahead and we're going to do everything until 2022. We're just going to keep on. We've got the bankroll for it. And you've got the stimulus request coming up. That's sending fears back through the market. And people are saying, hold on, maybe things aren't as good as we thought as stocks were going higher. Shocker. So how do you trade the Fed and what the Fed said yesterday? Well, first one and the easiest, you look at a couple of the bond funds. The Fed says they're going to be buying bonds. Interest rates are going to be going down. You go along the TLT shares or the IEF. I've got a couple charts of those for you here in a second. You do a short dollar trade. This is something that I put out there for my fast profit people yesterday. You go out and you can either use the UDN, which is an inverse dollar index from Invesco, or you'd use calls on the UDN. Something very simple. If you like to look at it, you can go and look at the fast profit that it should be up right now, should be live, and I walk you entirely through the trade. But that short dollar trade right now is a little more finessing, as I talked about. It's not necessarily a kick in the door down short. It's one of these situations where you can hold this for the next 6 months and make a nice hedge against your portfolio. And there's the you'd think that I was putting them in on purpose, but there is the typo of the day. Short oil continues, not shore oil as in offshore, but short oil continues. WTI futures are down 5% this morning. We nailed this one, folks. All of us together nailed this one just a few days ago, saying, hey, the WTI trade's going to turn around. 15% retracement I'm looking for. It might go a little deeper than that, given the economic outlook that the Fed gave us yesterday. So watch the short oil trade. WTI is going to continue, and the Brent oil trade is going to continue to be sluggish here with a downside bias over the next couple of weeks. Also, the energy complex is going to be right there with it. Hedge positions for portfolio. Hedge, 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 folks. This is why, if this manifests into something much larger, this is the reason that I've been telling you need to manage your hedges, maintain your hedges, because the market does make these turns. And if it makes another turn and moves down, and heaven forbid that it be down to those March lows again, we watch the hedges now, because that should be kicking in as your stop losses are taking positions that are profitable off the table. Your hedges should be starting to kick in. UDN is a great one. UDN is very simple, very easy to play. There's your chart of the TLT breaking above 160. You see this dip. Remember, we had interest rates that were spiking up until a couple of days ago, came down to 155. I think the TLT, with the forecast that you've got, not only for the bond buying and for the Fed being active in the market until 2022, you've got a TLT that could end up starting with a 2 handle here. And we're down at 160 right now. This is a long-term hold. This is one of those positions that, quite frankly, always got in my portfolio. Always have something in the TLT in my personal portfolio. Let's move on to the stocks in the news real quickly. California Public Utility Commission says Uber and Lyft drivers are employees. This came across the headlines this morning. Both stocks trading down 4%. Why does this matter? Well, independent contractor versus employee. If you own a small business or if you own a large business, you know the difference between the two of them. A lot less overhead and expense associated with the independent contractor. And that goes up, including the need to offer health insurance and other things when you have an employee. This has been bandied about for months, actually longer than months. And California's finally come through. Now, California is going to be a little more on the employee side in this matter, rather the employer's side. I mean, just look at what happened with Tesla and Elon Musk getting into it with California over opening up the plant. So California typically does side with employees, but in this point, this is going to put some pressure on Uber and Lyft. Uber, obviously, if you haven't seen it, Grubhub, they're out of the Grubhub deal now because they were afraid of it. There would be some competition situations or competition antitrust. Sorry, I was searching for the formal word from my education. Some antitrust problems with that deal, and they're probably right. But both of these companies trading down 4%. The market weakness is going to add to it. Obviously, the reopening isn't affecting Uber and Lyft as much. And if we have that turnaround and we see a rise in it, I think these are two companies that you'll see travel back down below those moving averages that are so important, especially the 200. Notice this confluence. This is going to be a critical point for Uber, right around that $31 range. A break below that is going to shoot you down to $25. That's a nice little trade that in terms of playing it down to that 31 and then waiting to see if that's going to hold. And if it doesn't, you've got another trade that goes to the downside to 25, about 5 points on each one of those trades or so. Yeah, that is a huge for Uber and Lyft. Some friends with Uber are making more than working with Uber and just staying home. Some friends with Uber are making more than just working with Uber and staying home. I'm assuming you mean that they're making more staying home than they were making with Uber, which is one of those cases that is really out there that you're hearing a lot of people talk about, especially with the stimulus and the extra $600. Are we paying too much for people to stay home when they could go out? And there are lots of part-time jobs out there. Believe me, I've got 3 kids that are, 2 of them were laid off and looking for, and they're piecemealing work together. But Ford, 2 safety recalls. Ford was already a little bit in technical trouble. The $7.50 range hit them, smacked them down. You've also got news with Tesla and other competition. Tesla is now growing, obviously, well beyond Ford, but the largest automobile company out there. You know what, Michael? Yeah, absolutely. It just means the limit is 21. If you can get it for better than 21, that's great. That's going to go away, I think, in a little bit of time here. But $21 is the price that I'd like to buy it for. You can decide if you'd like to get into it after that, if it goes a little bit higher. But for the track record purposes, we were using 21 for the fast profit. Anyhow, back to Ford, down 8% pre-market, 9% pre-market. Obviously, some of that has to do with the market. Look for Ford to touch down to that 550 range. When I look at the charts here, and I looked at some of my data behind Ford, I think we travel down to $5.50 from the $6.75 print that we had, and it could go down to that $5. Remember, round numbers tend to attract stocks. It also got overbought when it reached up to that 200-day. That is just an unfortunate situation when you run into technical resistance like this, the 200-day moving average, and an overbought reading as high as that was, the stock is just not going to break through. It is not going to break through. And you can see the 200-day held Ford back here, plus an earnings announcement. But the 200-day has been critical to Ford. Watch for that to make it down to $5 here. 550. Regeneron, on the positive side of things, they announced that they've got the Regeneron Cove 2 has entered human trials. They're going in July here. This is a big move, and you're seeing a lot of biotech company activity. When you look at the XBI, and let's just pull that up on the e-signal here real quickly. Let me do all my adjustments for you. There we go. So when you look at Regeneron and the other biotechs, this is just a nice straight line stock riding the rail. That's that 20-day moving average that I like to watch so much, riding that rail higher here. When you look at the IBB, the biotech sector, same type of picture here. You're not going to see as much weakness right now. If you're looking for something to be speculative in when the market's pulling back here and taking profits from other areas, I think right now the IBB is going to be the area where you're going to find those opportunities because there is so much going on from the perspective of a move towards that immunization for COVID-19. So people are going to be afraid to really sell out of these stocks because they want to be part of that announcement when it does happen. Something to keep an eye on in terms of those opportunities, even in a market pullback here. But Regeneron up 2.5%. Love the chart here. Love the break above the 620. I think that it, along with IBB, continue. Another one in that group, Moderna announces late stage development of its vaccine, 1273, that one. For the COVID-19. I can't believe I said for the COVID-19, against COVID-19. That's like me saying I'm going to the Walmart or I'm going to the Costco. People that know me know that everything is the. So phase 3 study of 30,000 subjects, they announced this yesterday, expected to begin in July 2020. They're going to do 15,000 that are going to have a placebo, and the other 15,000 are going to be actually taking the drug. We'll see how that turns out. A lot of people saying that may be too few. We might not actually catch a nice sample size with 15,000. But I think right now, obviously, Moderna, one thing I want to point out here, Moderna, if you remember, everybody was quick to jump into Moderna when they announced that they had a possible vaccine, shot the stock up to $85 and then pulled right back down to $50. This is that market that we're dealing with, because you have to watch that headline news will pop stocks and then pull it right down again if you don't have some materialization. So I think Moderna, the fact that we've been consolidating here just below $60 and now we're going to get a rush above, is going to give us a move towards that $70 to $75 range. Let's go to the ticker symbols. That's my last slide. So let's jump into. Yes, all of them did. Sorrento, all of them have done that. Heck, even Johnson & Johnson back in March when they announced it. Let's scrolling back up. Let me actually hit the Q&A here, see if we've got any in there. They're approved 6. See FAS moving up. Let's go to the charts here as well. FAZ. Oh, and I put in an X. My bad. Sorry, guys. A little bit of a typo there. So this is the bearish financial. Absolutely. Whether you play the bearish fund, and this is a 3 times. So the Direxion, they normally have a little more of a juice behind some of their ETFs, their inverse ETFs. This is a 3 times bearish. Usually I'm looking at the SKF. I'm looking at the 2 times. I'm in the pro shares normally, which they have a 3 time as well. Absolutely. If you look at the XLF, which will be your inverse of this will be your one that you're going inverse. You're seeing a top right now that is very, very clear. Remember, financials and small caps came to the party late. They did not. This is not a pullback because they're seeing profit taking. This is a pullback on fear in the market. This will be a pullback on profit taking and fear in the market, the NASDAQ 100. So this you can clearly say is going to be some profit taking. You look at a stock like Zoom, we see profit taking cycles. We're going to see another one here. With Zoom at 220, we're going to see it pop down to 200 again and probably break through 200 this time. So to get back to the FAZ, Absolutely. I think that you're going to see that go much higher, probably shoot up above to the, if I had to give you a point, you're going to see $23, $24 on FAZ. This is going to be a nice play against the financials, which were already weak. Should I keep my VIX in 50% profit or remove it before they open? Take the 50% off, Gary, for now. I think we look at that from the perspective of we're going to go for more on that play. The VIX is going to be moving very quickly to the upside here. How far do you think the S&P 500 falls, the SPY? I think our first stop for support is going to be somewhere around the 3,100, and that's going to be very short stop. It's going to go right through. That is my guess. And then we're going to see 300 be the next round. You've got the, at that point, you start to get some technicals into play. The 20-day moving average is in play. That gives you a 7% pullback right there. But ultimately, I think we probably come back and test a 50-day, which was going to be another, you're up to 11% at that point. 11% is what we consider a little bit over a healthy correction. 10% is a healthy correction. After that, if we fall, now you're looking into a situation where we're refreshing that view almost on a daily or weekly basis. But I think this is a situation where we're going to see the market try to stop the snowball effect right around that 50-day and 10%. How about using the VIXY? Let's pull up the VIXY for you very quickly. And I did it again with another typo. I'm sorry, guys. So the VIXY. So there's a difference between the VXN and the VIXY. You're dealing with intermediate term futures, short term futures. Basically the difference here is if you're going to play it for a couple of days, you're going to have less slippage on the short term, and you're still going to have more slippage. The short-term futures tend to have a little more slippage than the long-term. VXN is one that I normally will go with. VIXY, if you're going in for just a day or two, that would be one that would be a good play on this volatility as well. New to this, would like specific information on how to do a hedge. There is a great article that I wrote with Bill Padalon that's up on the website on moneymorning.com. And I think if you search for hedge in my name, you'll find it. It actually goes through 3 examples of hedges. And we're also going to be doing a hedged, just a hedged webinar or a roundtable webinar with the Night Trader service, where we're going to go through all 3 levels of a hedge. Your first one is tight stop loss, trailing stop losses. The second is using inverse ETFs. And the third is using an option strategy. The first 2 are something that any investor can do, any portfolio. My mother can employ those 2. The second one or the third one has to do with options approval, and you have to have that options approval to do it. So right now, I'd tell you, Robin, to go and read that the commentary that I put together, and it was a couple of weeks ago. Lots of volume on SDS, SH, SQQQ. Does that mean anything? Absolutely, Zachary. It means that people are looking to get some short side protection. Naveed, TJX is going to pause along with the rest of the market here. When we look at the chart, it was already kind of doing a little bit of a pause. If it's a stock holding, you put a stop loss in on this thing. This may be, even you look at the 54, which is going to be taken out today. I look for support at the $50 level, maybe even some support at $52. I think that TJX obviously is still a hold through all of this. Diddle on George. Okay. We got Anita. We got that out of the way. I think you're looking at somewhere around 7% initially, then 11% on the S&P 500. Watch the 50-day moving average. Fuel cell, MFI. Yes. I think you do want to take profit. You're going to get an opportunity to get back into those. I don't know if anybody saw, there's fuel cell shooting up to 350 plug play yesterday, or plug power rather, up to $6 yesterday. Obviously, a lot of people coming to look at the hydrogen trade, the alternative, the solar trade, the hydrogen trade right now, especially because of the Nikola, the IPO of Nikola last week and how that took off, and their plans to start opening up an East Coast corridor for these hybrid and all electric trucks. It got Elon Musk a little bit worried about his market share there. Therefore, I think it's something you should be interested in as well. Any easy puts for expiration tomorrow? Naveed, I would look at, if you're looking at trading something that's going to be expiring tomorrow, well, we'll go to my last note here. we're going to see two things here. Let me dovetail the two. Selling pressure is going to be getting to apply to the market. That's selling pressure from both profit taking, especially in the NASDAQ, and broader market selling from fear and just people getting out of the way of what they're expecting to see happen after yesterday's Fed testimony. So not testimony, but the press conference. I'm expecting a day today where we close on the lows and we're going to carry that through to tomorrow. These are the kind of moves when you see the Dow trading down 900 points. These are the kind of moves that people don't want to carry a lot of, and by people I mean traders do not want to carry a lot of long coverage into the weekend on. Headline news, et cetera, can happen. So is this 8x8? I don't think it's too late to get in right now, Alex. I think actually the stock was doing a little bit of a pause. It'll start to be pulling back today, but I think you could probably still jump into that. Also, Fifth Third, that moved yesterday quite a bit. We actually moved quite a bit yesterday in the Fifth Third, but you're going to want to still grab that. Anyhow, one other, and I lost my point there. Oh, traders aren't going to want to hold a lot of long exposure as they go into the weekend. Therefore, I think we close on the lows tomorrow. So looking at something that's an in the money IWM, slightly in the money IWM, slightly in the money options right now on some of these indices that are going to expire tomorrow. It's a risky trade. I'll be honest with you. It's a risky trade, but it's one that could pay off very well. And you get to walk away. You're not really paying for a lot of time premium, obviously. You're still going to play a little bit more with today's jump to the downside. Premiums are going to go up even for a 2-day option, but at the same time, you're not going to pay as much for next week. So you'll get a more pure play with that. Don't really recommend that for everybody. That is very, that's a risky one. So I've got to jump out. No problem, John. I got to assume because we're past the 9:15 and I really do have to. How much can XLF? I've got to take that for Naveed real quickly. How can it fall down? It can fall. My take is we could see another 10 to 15% in a week. We saw 5 yesterday. So with that, I'm going to point out you can use the mailbag, drop us a line in there, give us a question, give us a comment, tell us what's working, tell us what's not working. We'll take it all. We want to make this the best top half hour that you spend of the day and the most profitable half hour that you can spend of the day. So send us a message. Let us know how we're doing. Even if you put it in the chat here, I often save the chat so we can go through those afterwards. But let us know. I think that's the most important thing. Keep your head level today. Keep your hedges on. Make sure you manage them. Today's going to be a bumpy one, I think. I don't think we'll see anybody come in and try to save this thing. Usually around lunch, we see things slow down in volume. You'll see a little bit of a bump. Don't get faked out by that because I do think that we close on the lows and we carry that weakness into tomorrow. I'll be with you tomorrow for another half hour. We'll keep it short because I've got a tight schedule tomorrow morning as well. And unfortunately, I won't be with my 11 o'clock night trader people tomorrow. But 8:45 we'll be here just to check in on the markets, make a little more money as we close out the week. All right, with that, I'm going to wish you the best trading success. Hope that everybody has a great day. As I said, keep your heads cool, head on a swivel, and, manage those short positions right now. The luck prefers a prepared trader. I'll see my night trader people at 11 o'clock. Until then, have a great morning.